Hello everybody and welcome to LAT Market Snapshot. Today we're going to focus in on some content that our week 2 students have been covering this week, and that's put in particular focus on what sort of trader they're going to be and how they're going to execute their trade entries. And we can see on our screen here we have got a technical setup which are, like I said, our week 1 and 2 students have been covering. We've got a channel showing strong momentum reaching the highs. We've got a nice trend line. We've got a support level showing the increase in buying pressure. We've got a counter trend with a counter trend line and a sign of a loss in momentum with that counter trend failing to reach the bottom of this little channel formation here. The bottom of that, at this support level, we've then got a piercing pattern coming in from our candlestick formation. So technically a particularly viable setup. You'd be very confident and happy taking this forward. But so many traders, certainly on earlier in their career, come to perhaps a reasonable trade setup, but then misplace and get the execution incorrect. And it's absolutely critical you have a clear plan and expectation for how you are going to execute your trades. And a huge chunk of that will come down to what sort of trader you want to be. Do you want to be a trader that has a low hit rate, but very high risk to reward ratio? Do you want to be a trader that has a high hit rate, very low risk to reward ratios? How much confirmation do you want on your entry? And we've got 3 potential setups here, starting from the left hand side. This is the most aggressive entry, more of your bounce trading approach, where your confirmation is to bounce off the trend line, bounce off the support. Stop losses coming in here below the trend line, below the support level. Nice high risk to reward ratio back to the previous high, which is a valid level. This is an uptrend making higher highs, higher lows, so expectation would be to come and challenge that previous high. The risk here, of course, is that the counter trend line and this resistance level along the way may thwart your progress, and you might see this market move lower. You will, however, be rewarded with a 6-to-1 risk to reward ratio. Trader number 2, offsetting a little bit of that risk by waiting at least for the counter trend line to break, but still, of course, risk that this resistance could hold, and again, make a move down to the same stop loss beneath the support line, beneath the trend line. And then trader number 3, the highest level of confirmation here. You've waited for it to bounce off support, bounce off the trend line, and then break through the counter trend line and break through resistance. Significantly higher level of confirmation. It's going to decrease the frequency of trade. However, it is going to significantly increase hit rate, but direct correlation to that is going to reduce your risk to reward ratio to a 1.45 to 1 on the right here, a 2 to 1 in the middle, and a 6 to 1 here on the far left hand side. Now, most traders that we see come through the doors here at LAT are perfectly comfortable and competent in coming up with a trade setup and a conclusion as to what they think might happen, but quite often that setup is ruined by very poor execution. Okay, you need to challenge and be very considerate of which trader you would like to be. Okay, I think most like the idea of this nice high risk to reward ratio. It sounds more exciting, and potential returns are higher. However, I would say most people don't have the psychology or the discipline to actually execute this system. So important to challenge. How are you going to react should you take a loss? Everybody likes to think about the wins, but it's so important. How do you react when you take a loss? Are you a trader that has a propensity to revenge trade, to increase risk, to lose quick trades in succession? See many traders who do a lot of damage to accounts in a very short period of time. It doesn't tend to be a slow bleed out. Tend to get frustrated or get angry or want to revenge trade, and all of a sudden you've lost 2, 3, 4 trades in one afternoon, and psychologically that's very difficult to recover from. So you've got to be very clinical of yourself and say, can I realistically execute a strategy that has a very low hit rate, very high risk to reward ratio, if I'm unable to control my discipline and control my emotions? And I would say the majority of traders that I see can't do that. Like the idea of being trader 1 here on the far left, the reality is it's going to prove to be a very unprofitable means of trading. Trader number 3, okay, certainly has higher levels of confirmation, also need discipline in their own right. There's going to be a lower frequency of trade setups here, and therefore having the discipline and the patience to wait for that setup to come along is going to be absolutely critical. However, it does come with a far less stressful means of trading, a higher hit rate, greater chance of being able to pat yourself on the back and say a job well done come the end of that trade setup. Wherever you sit, trader 1, 2 or 3, they are all valid. They are perfectly valid means of trading. Your setup is still excellent. The technical in play here very good, and our week 2 students now becoming more and more confident in establishing these kind of setups. All valid. The question is, which one are you going to be able to personally execute and trade? For myself, longer term, looking at less trade frequency, I struggle to execute scenario number 3. Personally, for myself, I like a high frequency of trades. I don't mind taking losses along the way in pursuit of a higher risk to reward ratio. And for me, it's important, but I'm placing trades at quite frequent intervals in order for me to satisfy the psychology that I have. Certainly through the mentoring team here at LAT, we range across all 3 of these, some being very highly confirmed, very low trade frequency, literally 1 or 2, 3 trades a week, through to myself taking 4, 5, 6 trades a day perhaps on this more high frequency, less confirmed means of trading. As I said, whichever you take, they're all valid. You've just got to have a clear plan of action. Which one of these are you going to be? What is your psychology and your trade plan going to allow you to successfully execute? Food for thought there then, team. Please do join us again for another market snapshot further down the road.